Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Monday, August 16th. As always, please run the player at 1.25x to maximize your efficiency. Taking a quick look at futures, I see a lot of red on the board, but it's not too bad. Equities are down about 0.25%. Oil's down 1.25%. Copper's taking a hit, down 1.75%, and gold and silver are pretty much flat. On the macro front today, we've got really just one item, the Empire State Manufacturing Index. But then later on in the week, we've got some important stuff. We've got industrial production tomorrow, and Jay Powell is talking at 1:30. Tomorrow as well. And then Wednesday, we've got the FOMC minutes at 2 p.m. Housing starts. Then Thursday, we've got jobless claims, Philly Fed, Council of Leading Economic Indicators is out, and we've got a 30-year TIPS auction. Also on Wednesday, I forgot to mention, we have a 20-year bond auction as well. And then wrapping up with August option expiration on Friday. On earnings today, we've got not a lot of big names, but we've got Roblox after the bell. But then tomorrow, and then later on in the week, tomorrow we've got Walmart and Home Depot before the bell. Now, I know some of you have a trade on Walmart that's worked out really well. Decide what you're going to do with that today, because, of course, it reports before the bell, and you'll be locked out from doing anything, if you've got your option position on that one, if you don't take care of it today, whether you're going to cash it out or roll out and stay with the trade. But anyways, let's dive into this. I'm going to do something a little bit different today. Normally we look at the real short time frames. What I'm going to do is look at the bond complex first, and then look at the daily charts of both the indexes and FATMAAN names to give us a flavor where we're at on the bigger picture. So on Friday, we had that horrific University of Michigan consumer sentiment number. It dropped 13%. And it dropped down to a level not seen since 2011. And that slammed bond rates. You can see here we were trading 1.37%, and it slammed it all the way back down to basically 1.3%. We're a little bit below that. And the reason that's important is, this is the reopening trade. This is the reflation trade. This is the one where we were holding back, not wanting to get a head fake like these moves were a couple of weeks ago. And we said, okay, we broke above 1.3% and we've gone up. Let's start putting our toe in the water on some of these reflation names, banks, etc., some cyclical names, and then they slammed it on Friday. So, that's a combination of the drumbeat of COVID fears and inflation probably weighing on that consumer sentiment. And now the trick is that gonna filter through on consumer behavior? Does that mean everybody pulls in the reins and stops spending, like, canceling back to school, that kind of thing? So we're going to have to watch this real close. And I think the best advice I can give is honor your stops on the positions, and if this turns out to be a massive head fake, then we've just got to accept that we were wrong, we were early, and it was just another head fake, and we've got to accept that paper cut loss if in fact, that's what happens. So I think it's a little early to tell, but we've certainly got to watch these bond rates. And if rates are going down, TLT is going up, We got support right here at the 50 EMA, 200 EMA confluence, and we got a bounce. So I think right now, if this bar was an anomaly and it starts coming back down again and breaks below 146, I think the reflation trade is back on. And if it goes higher, if this drives up to 150 and breaks out, I mean, that's going to probably seal our fate. That's going to give a lift. We would be back in regime 1 here of rising TLT, and that's going to help tech. That's going to help the bubble names if interest rates are falling. See, I still think we are in the falling TLT camp, but this puts a question mark on it, so we're gonna have to watch that really close. And of course, if consumer sentiment falls through the floor, that's going to knock the dollar. And the way that rippled through on Friday was a big spike in gold. I don't have the gold charts here, but I sent them out on Friday talking about where we were on the gold trade. So anyhow, they're all tied. All this stuff is all tied together, as you know, and as we've been watching, through the recent weeks. We've also been watching this breadth on the number of stocks above the 50, and we have made some improvement. We're over 50 now, so we're in 55, 54 area. What we want to see is continued improvement, and I think there's a sustainable band between around 60 and 75. If we can get up in that area and hover for a while, that'll show a lot of healing, and that'll show that stocks under the surface are improving. And the way we've been tracking that is through this RSP, which is the equal weighted SPY. We had watched this big, long consolidation here where the equal weight index did nothing, and it consolidated between 146 and 152. And, about a week and a half ago, we got this breakout, and it really hasn't looked back. It's grinding higher, walking the 8 EMA there in pink, and you can see all the other moving averages are bullishly stacked. So, there's a lot of things out there, and I think this is always the case, but it seems like it's got an exclamation point now, is that, I am cautiously bullish, and this is one of the reasons why that, how can you get too bullish? How can you get too bearish if you've just broken out and price is above all the moving averages? You can't really get too bearish there. There are a lot of yellow flags, but I think that's what a bull market does. It keeps you worried, but it keeps grinding higher. Now, if this starts to roll over, we're going to see that, and then maybe those fears would be warranted, but not now. I just don't see it right now. And the same thing on SPY. Here's the daily chart. Now, I have adjusted this chart a little bit. I went through and we had enough information for me to change the channel before I had it drawn a different way, but our angle has changed, and so I was able to put a nice trend line channel here. And just like the equal weighted SPY, the cap weighted SPY has just broken out, and it's above all the moving averages. And so, on our RSI, it's above 50 in the bullish regime. PPO is above the zero line, so that's bullish. We do have the bearish divergences that we've been pointing out for months, but bearish divergences can go on, and So in that regard, it's not a sell signal. It's a big yellow flag that waves over our bullish positioning, and this is cautionary from the standpoint of you can get a trend change at any time. So our first hint of that would be to come down, lose this 442, come down, lose the midpoint of this channel, lose 437.5, and move down towards the low side of this channel, and that would put us below the 50. So I mean, those are the things that we would see if the mood of the market is changing. But for now, I think we got to stay bullish, even as uncomfortable as that may seem at times. And it is uncomfortable. You just have that sixth sense that something's going to happen, whether it's sparked by Afghanistan, sparked by some economic print that comes out, sparked by something Jay Powell might say tomorrow afternoon. Who knows what it could be. But at this point, I don't think we've got any evidence to lead us to believe that we should abandon our positions. So let's look at the Qs. We've got this big rising channel, and what I've done is inside of this thing, I've put a rising wedge off of this prior low up towards the top. We're trying to break out here at the top. Again, price is above the ADMA. All the moving averages are bullishly stacked, and until we lose 365 and come down below this wedge, below the midpoint of the channel, I think we got to stay long. I really do. And we'll get into the FATMAAN names in a minute and show you where the strength and weakness lies. But until those FATMAAN names give up the ghost, I think the Qs stay strong here. And as long as you're above 365, which equates to the 20, which is right here, I think we're fine. IWM looks totally different, and this is another yellow flag. If the market is going higher, how come all these stocks in the Russell 2000 index, can't do anything? I kept thinking, we're going to get this breakout here at 224 and at least take us up to the top of the box where we could mount a challenge to break out. That would be hugely bullish for the market if that were to happen. But it just hasn't yet. We've been hovering around this midpoint of the consolidation range here at 222. For the past week, every opening bar has been a big red bar down, and then it fights the rest of the day to try and recover. So, the way I have it drawn here is we've got a trend line off of this recent low, and you break below 220, that's not going to be good, because then it's going to kind of open a path towards this 212 at the bottom of the channel, at the bottom of this consolidation range. Now, on the flip side of that, if it can recover 222 and then break out of 224, then that's totally different. Then you would say the broader market, the smaller cap names are starting to perform, and that's what I would really like to see. That would give me a ton of more confidence in the market if IWM could participate at some level. Right now, it's not doing anything. So let's move on to the FATMAAN names. And if you're new here, I really appreciate you spending some time with me. Welcome to the channel. I hope you appreciate getting this analysis, getting the levels If you think this will help in your trading, please hit the subscribe button and the alarm bell. Jump over to the show notes where you can find a link to drop in your email and get all my content morning, noon, and night. In fact, I've got some trade ideas that I'm going to send out a little later this morning. You would get that right in your email box. It'd be a perfect way to join the team and get involved in our group. I think your trading will improve dramatically. And longtime listeners, thank you so much for the support and for passing along my link to your trading and social circles. I really appreciate it. So let's look at Facebook. We had the drop on earnings a couple of weeks ago. It's kind of been consolidating under this level. We're within a rising channel, so that's bullish. Prices above all the moving averages. You can see prices above the 8 and 20 day. So that's bullish. I mean, the next objective for bulls is to break into this gap. And it's hard to see here, but that starts at 364 and goes to 373. So we've got a $9 gap here. And that's the next objective for Facebook, is to take that out. And, you know, what you don't want to see is a break back below this uptrend line. That would not be very good for Facebook and the market in general. Apple looks strong. We had this impulsive move in the mid 120s, rocketed up towards 150, and it has spent the better part of 2 months consolidating. But notice now within this, I've got it drawn as a flag. We've got a series of higher lows against the resistance level at 149.50. What we really want to see here is, of course, a breakout, and that would give Apple a lot of room to run. We could draw this as a bull flag, and that would project up into the 160s. If we were to get the breakout here, notice that PPO has come down but is starting to curl back. This will give us a high PPO cross right here if we could get some bull activity. And also notice that even through this correction in time, that RSI has not lost 50 the whole time. So that's a bullish look. So Apple looks good. Tesla looks a lot better as well. We got that impulsive move off the floor a couple weeks ago, and it's spent time flagging here under this gap that runs from 720 up to 735, 740 area. What really has to happen for Tesla is to take out the gap, break out of this flag, and then run towards 770, which is the next technical target above the gap back at this prior high. But notice again, prices above the 8, 20, and 50 day, they're all bullishly stacked. Hard to get too bearish there on Tesla. It looks like it wants to break higher and fill this gap and move on to the next level. Microsoft is another one that looks fantastic. A lot of us got long here on the breakout, 245. And then at 260 was the big breakout. It's gone right up to 290. Spent a lot of time consolidating. And then on Friday, we got the breakout above 290. I'm in that trade. I got long here. So as long as Microsoft stays above 290, it's in blue sky territory. I mean, if you're at all-time highs, how can you get, really bullish? I mean, really bearish on that kind of thing. It's nothing but, all-time highs are bullish. So I really like being long Microsoft here. And as long as it stays above 290 and keeps that breakout intact, I think Microsoft looks good, and you can tell above all the moving averages. Amazon doesn't look so good. Big gap down on earnings. It's been really weak ever since. It's made a move down to the midpoint of this 600 wide consolidation area. And, if it can't hold 3250, I see this thing running down to 3100. And then once you're on the wrong side of the 200 here in gold, it actually targets this 2950. So in my mind, Amazon's really got to hold the line here at 200, at the 200 at 3250 to kind of keep the damage contained. At the very least, consolidate here and build a base and start to move up. Because if it just drops right through the 200, I think it's going to come down to 3100 pretty quickly. Google, one of the strongest stocks in the market. Steady uptrend the whole way off of the November lows. Price above all the moving averages. RSI up around 70. PPO well above the zero line. Price above all the moving averages. Trying to break out here above 2750. I think, just stay long. That's about as succinctly as I can say it. There's no reason to get out. Until price shows, or rolls over and loses the 8 and 20 day, there's no reason to get out of this trade. So I like it long. And even if you haven't participated this whole time, buy the breakout to all-time highs, which is right here at 2750. Then the door is going to be open towards 3,000 if the rest of the market can cooperate and push things along. Netflix. I would just describe this as soggy. We've had this $90 trading range that goes back a year. A lot of us participated in this $35 gap fill, which was kind of the high point of the last few months. That was a nice trade. Some of you captured it. But then it has fallen back to the midpoint of this range. We've got the 200 right below here at like 508 acting as support on these down moves. So you can look at it one of two ways. Either just step aside and let this thing gather itself and see if it's going to break higher or break lower. Or you can say, you know what, I'm going to be long above either 515 or long against the 200 down here at 508. But it does seem like it's lost a lot of energy, and I wouldn't really call it bearish, but it's hard to see it being really bullish either. It is in a trading range, and until it really either breaks out or breaks down, probably going to be a lot of choppy action. SMH, I think, is a very important risk-on industry group within the Qs and the broader market as well. We had this big breakout here of 258, breaking out of this $35 wide consolidation range after having been frustrated here with a couple little breakouts up to 262 that ultimately failed. We had this nice breakout here, got up into the low 270s, and now it has come back and actually touched 258 a couple of times in recent days and has held. So, what is that? That's a breakout and a back test. Happens all the time. So, for me, as long as 258 holds, that is that's bullish in my mind. It gives anyone that did not catch the first move a second bite at the apple and a chance to get long at a very objective level for what I hope would be a $35 measured move higher. Now we're going to have to see how all that plays out. And I do want to offer one other scenario. Another scenario might be a big red bar that comes down, undercuts 258, and tags the 50 EMA here in green at 257, 256, right in that area. That would definitely scare a lot of technicians. Why? Because you never want to see price come back into the range. See, it did that here. It came back in, found support at the midpoint, and then bounced. I think a lot of people, if that scenario were to happen, like, oh my God, it happened again, this was all fake, right? Everybody exits their position because we're below 258. Then it finds support and then goes. So be ready for that move. You won't be able to figure that out until hindsight, but I think you could almost use this 50 EMA as a proxy for 258, and I would not abandon this whole trade until price closes below the 50 at 257, just for that reason. And if you had gotten long here at 258, I mean, you're on a $250 stock. Hopefully you'd be able to, give it at least $1 worth of room to the downside before you stopped yourself out. So think of it that way. I think is the right way to think about this. Just a couple trade ideas for you. Steel has been exceptionally strong the last couple of weeks. Here we've got U.S. steel in a trading range between, let's call it 22 and 29. So that's a $7 range. You get a breakout above 29, I think you could find 36, at least the mid 30s here. So I like this one on a breakout. Then you can stay long against 29 with a stop just below. And last one here, Clorox. We had set this up as a bracket trade last week. Here was a drop on earnings, and here was some consolidation action. And on Friday, we just got a breakout into this gap. So I don't think it's too far gone, but if you need like a consumer staple name and you want to try a gap trade here, I still think it's within reason. So you can get long against, say, 167. Stay long against that level and see if price can't grind higher and give you a nice gap fill about $13 higher up towards 181. So market has us nervous. We got a lot of macro stuff going on. Afghanistan, all kind of different things happening. I think the correct posture here is cautiously bullish. We don't have much evidence on the price side to say, it's time to get out. Continue to raise your stops and your strikes. Continue to harvest those gains as you get them, and just be prepared for any kind of reversal that may come our way. I don't think this is a time to be complacent, for sure. I think it's healthy to have a few nerves, and to have that, wall of worry there. That keeps everybody honest. But like I said, Price tells me to stay long, and that's what I'm doing. So let's wrap it up there. This has been Chris Buss with Traders Profit Compass. Talk to you next time.